Hi. Well, as you know, I'm tired of repeating the same with regards to Wall Street investment firms, stock ratings, warning you to be careful about them. For example, recently I discussed the case of Altera Corporation ahead of Intel buyout. I repeated the same article on the blog, I don't know how many times, on the Twitter, repeating the same basically every single day, warning you not to sell short that stock, in fact to buy and to make an investment in Altera, disregarding not only Wall Street firms ahead of earnings as well as after earnings announcement, as well as that American entertainer Jim Cramer, who told you to sell shares of that company and to bail out. Well, if you bail out, you bailed out at the bottom, since Altera, as you know, was then acquired. Anyway, I already had the opportunity to refer to cases like Herbalife. I already had the opportunity, for example, today to discuss Umbrella. And when we have, and I'm tired of repeating the same almost every single day. Today we are going once again to discuss Abercrombie, and it is not the first time. You have plenty of information available on the blog of the company about it. A few years ago I called this company, Abercrombie, a strong sell. A few years ago, when shares they were trading around $77. You have the case study online. At that time, Wall Street, they had strong buy ratings. It happens that in January or February 2015, basically all of them, they downgraded Abercrombie. The fact is that if you refer to the existing material and the performance of the stock since Wall Street downgraded Abercrombie, it has not been selling, all right? What the stock has been doing, in fact, is to move sideways. But you are aware also that Abercrombie reported earnings twice during the course of 2015, and those earnings, they were dismal, they were very bad. So Wall Street analysts, they had motives to downgrade the stock. But those downgrades, they are incorrect, because they should have downgraded the stock a few years ago. So at most what they should have done in 2015, it will be to reiterate a downgrade that never existed from them in the past few years. And by downgrading for the first time in 2015, what has been happening is that retail investors, they have been selling short the stock, and professionals, they are aware of this, and as they are aware of this, what they do is to squeeze the retail investor, because the retail investor is selling short for the first time shares of Abercrombie. You just have to refer to the existing material that is available on the blog by here on video on demand. For example, you click on one of them here, the case of Umbrella is the most recent, and then if you refer to the case on Abercrombie, the ticker NEF, there are here several articles. Vieira makes headlines on Wall Street Journal, and this, I'm going just a moment, Abercrombie Stock Outlook 2015, do not listen to Morgan Stanley, earnings don't matter on casino market, and blah blah blah, and you have here also other sell Abercrombie and Fitch stock, and where you have, I believe, the case study. So if you refer to this blog announcement in March, the title is very explicit, but I'm going to explain all this in step by step in detail, all right? Morgan Stanley downgraded Abercrombie at the very bottom, okay? So quite frankly, I mean, this is a fact. When I refer to these stories, be it Umbrella or GoPro or Apple or whatever, I always tell stories based on facts. The fact is that they downgraded this stock at the bottom, right? At the bottom. So the shares, they never traded below the downgrade. And this happened, for example, with other cases that you are aware of, a very famous one. I'm not comparing Abercrombie to this, what I'm going to mention now. That is the case of Yoico. Deutsche Bank downgraded at the bottom, and meanwhile, shares of Yoico zoomed almost 300%. And that is a fact, all right? And we upgrade to strong buy. In this case of Abercrombie, obviously I cannot upgrade, I don't have a strong buy rating on Abercrombie because I'm aware that what has been happening in Abercrombie, it is all about a game that involves a short squeeze, okay? So you find also news about it, in fact, on CNBC. But the reason to mention the case of Abercrombie, once again the title, investors, they should be aware or concerned with Wall Street investment firms, stock ratings, and you remember other example, a famous one that I've been talking about quite often, Twitter. The fact is that it is a shame that these firms, they post these downgrades, and on the background or on the, what they, I'm not saying that what they, right, but other players, what they do in fact, as I explained here, when the title Vieira makes headlines on Wall Street Journal, this appeared in fact on Wall Street, I think that it was this week or last week, where I played the short, the long side in Abercrombie, precisely due to the involved short interest on the stock. But I repeat that I'm not comparing Abercrombie to Yoico. What happens is that all these firms, they are downgrading a stock, and the stock or shares of the stock, they don't go down because professionals, they know that the retail investor is selling short for the first time, but and what in the end they do is to take advantage of it by buying the stock, and then obviously what the situation that this creates, it is the fact that shares, for example, of Abercrombie today, I believe that they closed around this price. You have here the chart in Abercrombie, okay? So are shares worth this price? Shares are worth what they are worth. I mean, tomorrow, for example, someone might be willing to pay $24 for Abercrombie. In 2 months, they might be willing to pay, $18. Okay, it is what it is. All right, but what I'm warning you, or what I've been warning you here for in multiple across different market sectors in many companies, is for these ratings that they appear very late into the game, all right, because they should have downgraded the stock a few years ago, and at most in 2015 they should reiterate or lower the rating or the target in Abercrombie. But that was not the case because, based on fact, they downgraded to sell for the first time. And so you also to say that investors, or traders, there is this, when you look at this, for example, Abercrombie compared to Apple, price to earnings, we are talking about almost 3 times, okay? So this is not an investment. This is all about short squeeze, okay? But the fact is that it is happening in the markets. If this is happening in the markets and not in all stocks or not in all companies, but there are many situations where this is happening, it is a red flag. Because today, for example, as the time passes, I see less and less opportunities to invest in the markets because also the professional, I mean, this kind of activity in a stock, it is good for a professional, but since most are not professionals, this is in fact quite dangerous to get involved in. So what I do recommend when you see these situations happening is that you do not get involved in these kind of games, okay? This is my personal recommendation, that you should stay away. And if you decide for some reason to play it on the long side, and for example buying the stock, eventually you can make some money, but the problem is when you are investing in a company that does not have any fundamentals whatsoever, does not have earnings. Like I explained in the case of GoPro last year in 2014, or in Twitter, or so you have sometimes you might have what we call bear market rallies or short squeezes, temporary short squeezes. But those temporary short squeezes, if you don't bail out, if you don't close your position at some point, what happens is that sometime later you lose all your money. So when you see this, and I'm saying this because I saw this on CNBC, inciting players or investors or traders to speculate in Abercrombie alongside with options trading. And that is very dangerous, because if you then, I repeat, if you are not a professional, if you don't, in particular using options, if you don't know when or how to play the options, and because the options involve the time variable, which is rather important, and if you also play the stock, but then if you don't at some point take profits, as I did, in fact, you have to refer to the article on the blog. At some point you can wake up in the morning, or a couple of weeks later or 2 months later, and you lost, what was a profit became important loss. But I'm talking about this case of Abercrombie because in the end this is a shame. It is a shame for all the stock ratings that they have been appearing. If I was head of trading in one of these firms, I would be quite frankly ashamed. This is the proof that they are incompetent, because you don't, by downgrading or upgrading a stock based on fundamentals, you are aware that you are not selling short the stock, all right? Because the news, and today there were other news about other downgrades, so multiple downgrades, but the fact is that they are not selling short the stock. And so you have to conclude, or to probably consider that eventually they might be in fact buying the stock, all right? And if they are buying the stock, they are doing, I'm just speculating, okay? And if they are buying the stock, what they are doing in fact is to the opposite of their public recommendations. So this is not about, when I see these kind of games, quite frankly, this is a red flag, because when we extrapolate this to the stock market, and I repeat that Abercrombie is not exception to the rule, it is dangerous, and even professionals, they have to look at to become suspicious about this kind of activity, because I've been following the markets daily, all the time, and lately I started to see things like this. I already warned you about, for example, the case that appeared a few weeks ago in Yelp. In that particular case, there was a clear share price manipulation, as I proved on the video, and we could see it on the tape. Here it happens precisely the same. This 3 days ago, when shares they were trading around $20 and a half, more or less, we spotted that the stock, despite the downgrades, no one wanted to sell. Okay, what in fact they were doing is to buy the stock. And when we look at the activity, and for example, you are aware that I don't have a long position in Apple, because I told you, if you follow live on Twitter, that I sold the stock recently, the 132 and 77. But when you look at this, compare Apple to this, for example, Abercrombie, all this, what is happening in the markets, there are these connections of the reality that although this has been the case for all the time, but these connections, if they start to repeat and to be of important dimension, something is wrong, or does not smell. It smells, okay, and therefore, I'm warning because I'm concerned with this. And the second half of 2015, I think the market is going to be more complicated, precisely because of this kind of games that we call, in fact, here in the company, we describe these kind of games as scam games. Because it is as it is. So you have to deal and to to accept the reality as it is. But the fact that the reality as it is, it does not mean that we don't have to expose these scam games, and in particular these shameless Wall Street firms who downgraded this stock at the bottom, I repeat, several times. Not only you see here in March, you see it is on the chart. I just show you, in fact, that downgrade from Morgan Stanley at the very bottom, and again in June, when the company reported other dismal quarter, very negative, one of the worst quarters, in fact, in Wall Street. Shares, instead of selling off, they are now basically at the highs in 2015. Okay, excluding obviously the January and February. All right, and so you have to be careful. So stay away from these stocks, because there are, in fact, scams in Wall Street played by several market participants. The Securities Exchange Commission does not give a shit about this, but I think that they should, because no one expects, for example, or at least I would expect from a professional or from a company, investment firm, if they are downgrading a stock based on fundamentals. In that case, for example, although I don't have, I repeat, a long position in Apple, I don't comprehend how there are companies with sell or neutral ratings compared to this one. Does not make sense. Okay, so here there is something that does not make sense. Okay, and when these things they don't make sense, it is a red flag, warning signal. Why? Because the ratings, as I've been explaining in the case of Twitter and so on, or Yelp or many other situations, the case of GoPro that you remember in 2014 and also in the first half of 2015, the ratings, stock ratings, are mainly a result of their positions, but not their opinions or their what they really think about it. That is to say, they don't put the money where their mouth is. Okay, so they might say that the stock is a sell, does not mean that they are selling short the stock. That might eventually, in fact, they might be buying the stock. You don't know, right? Or the customers, they might be buying the stock. So I'm warning you, because one could say, well, but this is about short squeezes. This is about short squeezes, but there are limits for short squeezes, because this company, for example, the price to earnings, this is not a Chinese company. If it was a Chinese company, it will be different, okay? But this is not a Chinese company. It is a company in the US stock market. It is a company, in fact, with complicated issues. No one talks about them, and they should, because if they downgrade the stock, in fact, probably they should downgrade based on the problems that the company has, and not based on formulas that they don't have no interest whatsoever, because they don't tell you what the future about the stock. And so you have to stay away from these scam games, or at least avoid these scam games, and to invest or look for opportunities in companies that they are credible. Because the management of this company, Abercrombie, it is not credible. They have been fooling you for the investors for years, like the case of Lance Hand with that Eddie Lampard or Sears Holdings. It is the same. So if you buy a stock or you invest in a stock, and it can be, I'm not saying that if you want to buy shares of Abercrombie, you buy. I'm very pleased with that. I don't mind at all. Or if you want to sell short the stock, you sell short the stock. I'm not here to give an opinion about Abercrombie. But I'm saying that this is very dangerous because there are so many companies in the market. You always have to make that question: where I'm going to put my money? And certainly you should not, because you see this. Just have to Google and the news from yesterday on CNBC inciting traders to take advantage of the short interest in Abercrombie and to buy the stock. Certainly, I did the same. You have the article on the blog proving that I did the same. But in my case, I'm a professional and I'm aware that there are limits for this, and I'm also aware that this is a scam game, and therefore it was for the quick profit, where I know how to do it, but then I see that players, they probably use that information or whatever, to then publish these ideas on TV and to incite the small player, to buy shares. But then if, a few weeks later you see shares down 10 or 20%, then don't blame me, okay? Because, miracles, they don't exist. Big people normally believe in miracles, okay? And I don't know why. They see crashes, they see, things that they don't exist. They see what, they want to believe in something, all right? They need to believe in something, so they buy theories for years. They buy theories that they don't make sense. But I'm concerned, quite frankly, or I'm starting to be rather concerned with stock market, because these kind of games, and today I'm talking about Abercrombie, but I've been talking about Twitter, I've been talking about Yelp, I talked about Herbalife. There are so many that, quite frankly, it is not like in the past. It's not like, this repeats in history. No, the level of the scam games played in 2015, in fact, recently, starts to be rather, in terms of number and dimension, rather dramatic, including the case of Yoico that downgraded to sell at the bottom by Deutsche Bank. And then those reiterations, because they downgrade, and besides, despite the fact that then shares, they, move 250%, the companies, they announce earnings and so on, they don't tell you anything else. They don't tell you, the new ratings. They don't say anything. So why are you going to invest in the markets based on stock analyst ratings that they are public, but then you are going to do what? You are going to call them and to ask for your money back? In Yoico, you lost all of your money. So this market in 2015, as I expressed, as I already mentioned a while ago, became a bit, not in all cases, but in many cases, quite frankly, it resembles a casino market, where there are no rules. These things, they happen, but they are not happening like as in the past, okay? This is direct also result of, quite frankly, unfortunately, of the central bank's policy, because if the central bank policy, it was different, in the end, this kind of activity allows, those that they made the wrong decision of investing in Abercrombie to be bailed out in a company that does not have earnings, does not have fundamentals, does not have anything. And so what this activity, it helps in the end, it is precisely to bail out the loser that invests in the company without any fundamentals, which is the opposite of a company like Apple, you see, or many others in the market. Today I referred to the example of Umbrella. So we are talking about, this market has very good opportunities. or investment opportunities, quality companies. That is what I recommend you to invest in or to buy shares. But these kind of companies like Abercrombie and others, I don't know, for example, that BlackBerry, that a few years ago it was a darling. Stay away from those stocks. Why do you need to invest or to buy or to trade shares of those stocks? Is not comprehensible. Is just for gamblers or penny stocks. Okay. So these kind of companies, when you see this kind of activity in a company or in a stock, and forget about whether it is Abercrombie or a different one, but when you start seeing this kind of strange activity that you are aware, you see, on the tape or whatever, you find strange, you automatically label it as a scam game, and you should not participate. And by not participating, at least you do not lose money. Look for quality companies, investments, buy on weakness, as I've been saying, not after the rallies or chasing the momentum. And do not buy stocks just because of the very high short interest, because temporarily you can make a profit, but then once they stop covering, the real buyers have to step in. If they are not real buyers, what then are they going to do? I gave you the example of Apple Group. The stock melted, and if you bought at the wrong price, and then there is no short there is no one to cover there, you can lose. Or in the case like Abercrombie, in the case of BlackBerry or GCP, you, by buying or investing in the wrong company, you then can stay years without ever getting your money back. And most of investors, since they have small accounts, I would say that if you buy the wrong company or invest in the wrong company, and then the things they turn against you, you can stay years without seeing your money back. Okay, and this is the reality. So you have to be very careful about these, quite frankly, these situations, because I know that the gamblers, traders, they look precisely for this kind of games where they find fun to participate. They let's squeeze the shorts, blah blah blah. But my friends, there are limits for this, because then the fundamentals, they step in at some point, and if you are not out, then you can get into a serious problem. Okay. So I wish you good luck. Thank you.